Just signed the largest trade deal in history. I think maybe the largest deal in history with Japan.
Good evening, and welcome to a story that's rocking global markets and sending tremors from the White House to Tokyo's trading floors. President Donald Trump is in the hot seat tonight after a $550 billion trade deal with Japan, initially trumpeted as a historic victory, has spiraled into a vortex of confusion, discrepancies, and economic chaos over a 15% tariff agreement. What was meant to be a cornerstone of Trump's aggressive trade agenda is now teetering on the edge of collapse, with handwritten edits, conflicting figures, and questions about whether this deal is a masterstroke or a catastrophic miscalculation. Buckle up as we dive deep into how this agreement went from a White House celebration to a global economic firestorm, what it means for U.S.-Japan relations, and how it could reshape the world's financial landscape. Let's start at the beginning, where the headlines first erupted. On July 22, 2025, President Trump took to his platform, Truth Social, proclaiming, "We have just concluded a massive deal with Japan, perhaps the largest deal ever made." He announced that Japan would invest $550 billion in the United States, with the U.S. retaining 90% of the profits. Japanese goods, including cars, auto parts, pharmaceuticals, and semiconductors, would face a 15% tariff, a significant reduction from the 25% levy Trump threatened to impose starting August 1st. Japanese Prime Minister Shigeru Ishiba mirrored the optimism, calling the 15% tariff the lowest figure to date for a nation with a trade surplus against the U.S. Japan's trade negotiator, Ryosei Akazawa, even posted #Mission Accomplished on X, signaling a diplomatic coup. The Nikkei index soared, with Toyota and Honda stocks jumping 14% and 11% respectively, as markets celebrated what seemed like a breakthrough. But within hours, cracks in this so-called triumph began to surface, and they're threatening to swallow the deal whole. The first red flag is the numbers themselves, because they don't add up. A photo posted on X by White House Deputy Chief of Staff Dan Scavino revealed a card on Trump's desk during negotiations with Japanese officials. That card, meant to outline the deal's terms, listed a 10% tariff for some sectors, alongside the 15% for automotive, pharmaceutical, and semiconductor industries.
They and others are so spoiled from having ripped us off for 30, 40 years that it's really hard for them to make a deal. You know, it's very hard. As an example with Japan, they won't take rice, and yet they desperately need rice. You know that.
Even more bizarre, the card showed Japan's investment at $400 billion, with the 4 crossed out and replaced with 500 in marker. Yet Trump announced $550 billion, $50 billion more than the altered figure. What's going on here? Was this a last-minute negotiation tactic, a clerical error, or a sign of deeper disarray? Commerce Secretary Howard Lutnick, who claimed credit for the card in a Bloomberg interview, called Trump the negotiator-in-chief, but dodged questions about the edits. Treasury Secretary Scott Bessent vaguely referenced an innovative financing mechanism, but offered no clarity on the $50 billion gap. The White House's silence has left analysts and markets scrambling, with some on X calling it a deal written in crayon. Let's zoom in on the tariffs, because this is where the chaos really takes hold. Trump's initial threat in early July was a blanket 25% tariff on all Japanese exports, up from the 24% reciprocal tariffs he announced on April 2, 2025, during his Liberation Day policy speech. That threat sent Japan's auto industry, which accounts for over 25% of its $148.2 billion in U.S. exports, into a panic. Japan exported 16,707 vehicles to the U.S. in 2024, worth $52.3 billion, and a 25% tariff would have added roughly $13,775 to the cost of a $52,300 vehicle like a Toyota Camry. The Nikkei index tanked as automakers braced for a hit, with Toyota projecting a 20% drop in U.S. sales. The 15% tariff, finalized after a 75-minute Oval Office meeting, was pitched as a compromise. Ishiba told reporters it was a historic low for a nation with a trade surplus. And U.S. Treasury Secretary Bessent said Japan secured it through a mix of equity and loan guarantees for U.S. projects. But here's the kicker. Akazawa confirmed that 50% tariffs on Japanese steel and aluminum remain in place, a detail Trump glossed over. This selective relief has left analysts wondering if Japan got a bargain or if the U.S. squandered its leverage. Now let's unpack the investment piece, because that $550 billion figure is raising serious questions. Trump claims Japan will pour this money into the U.S., with 90% of the profits staying stateside. The White House later fleshed out specifics. Japan will buy 100 Boeing planes, increase rice purchases by 75%, spend $8 billion on other agricultural products, and boost defense spending with U.S. firms to $17 billion annually, up from $14 billion. On paper, it's a blockbuster deal, promising hundreds of thousands of U.S. jobs. But Japanese officials are singing a different tune. Akazawa described the $550 billion as a cap, not a firm commitment, including government loan guarantees for investments in pharmaceuticals, semiconductors, and energy.
Japan has struck a surprise trade deal with the US that would see crippling tariffs on Japanese car makers lowered to 15% in exchange for $550 billion of investment in the US.
Andy Laperere from Piper Sandler called it a ceiling, not a floor, warning that the actual investment could be far lower. Japan's economy, teetering on the edge of a recession with a debt-to-GDP ratio of 252%, may struggle to deliver. If the funds fall short or the 90% profits claim proves exaggerated, Trump's victory could turn into a political liability, especially with midterm elections looming. The rice angle deserves a closer look because it's a flashpoint that's been overlooked. Trump has long griped about Japan's resistance to U.S. rice imports, posting on Truth Social last month, "They won't take our rice, and yet they have a massive rice shortage." In 2024, Japan imported $300 million worth of U.S. rice and $114 million from January to April 2025, per U.S. Census Bureau data. A 2021 U.S. Trade Representative report flagged Japan's tightly controlled rice market as a barrier, with strict quotas protecting local farmers. The new deal promises a 75% increase in rice purchases, but Akazawa emphasized it won't sacrifice Japanese agriculture. This raises doubts. Is Japan genuinely opening its markets, or is this a token gesture to placate Trump? If the rice commitments falter, it could reignite Trump's frustration, potentially triggering new tariff threats and further destabilizing the deal. American farmers, particularly in California and Arkansas, are watching closely, hoping for a windfall, but wary of Japan's protectionist track record. The political drama in Japan adds fuel to the fire. Prime Minister Shigeru Ishiba is fighting for his political life after his coalition, led by the Liberal Democratic Party and Komeito, lost its upper house majority in recent elections following a lower house defeat in October. The Mainichi newspaper reported that Ishiba may resign by August's end, with the trade deal's success or failure tied to his survival. Ishiba told reporters he's committed to protecting national interests through this agreement, but his party's growing opposition suggests trouble. If Japanese voters viewed the 15% tariff as a win, Ishiba might cling to power. But if the deal's ambiguities, those handwritten edits, the vague $550 billion promise, spark public skepticism, his government could collapse, throwing U.S.-Japan trade talks into chaos. Ishiba's decision to govern in minority, as reported by El País, hinges on his ability to sell this deal as a victory, but the clock is ticking. Let's broaden the lens, because this deal's fallout extends far beyond tariffs and investments. Trump's trade strategy revolves around reciprocal tariffs, matching U.S. levies to a country's trade surplus. Japan, the U.S.'s fifth largest trading partner, ran a $68.5 billion surplus in 2024, exporting $148.2 billion in goods to the U.S. versus $79.7 billion in imports. The April Liberation Day tariffs, initially set at 24% for Japan, were paused for 90 days, giving Tokyo time to negotiate. The 15% rate looks like a concession, But economists like Mary Lovely from the Peterson Institute argue it gives Japan an edge over other exporters like South Korea, still facing 25% tariffs. This inconsistent approach, 19% for Indonesia and the Philippines, 50% for Brazil, has Wall Street on edge. The Nikkei's 3.7% surge on July 23rd reflects relief, but the Dow's tepid response signals investor unease. The IMF warned hours before the deal that tariffs have minimal impact on trade deficits, urging Trump to focus on fiscal consolidation instead. Will he listen? History suggests otherwise. The economic consequences are already hitting home. A 15% tariff on Japanese cars and parts could raise U.S. consumer prices significantly. For a $52,300 vehicle, the tariff adds about $7,845, potentially pricing out middle-class buyers. The promised job creation, hundreds of thousands per Trump, lacks hard evidence. If Japan's investments lean toward automation or high-tech sectors like semiconductors, the job impact could be minimal. U.S. car makers like General Motors, already reeling from tariff-related profit dips, are frustrated, as Reuters noted, because Japan's auto stocks soared while theirs stagnated. Meanwhile, U.S. mortgage rates, hovering near 7%, could climb higher if tariff-driven inflation tightens collateral markets. Bank of America strategists warned that a $20 billion collateral shortfall could push overnight repo rates up by 35 basis points, raising borrowing costs for American households. From car lots to home loans, the ripple effects are real. Trump's reaction is where the story gets personal. The "freaking out" headline captures his frustration, and it's not hard to see why. Trump thrives on deal-making optics, and the sloppy rollout, handwritten edits, conflicting investment figures, vague profit splits, is a PR disaster. Sources close to the administration suggest he's livid about the leaks exposing the card's edits, which undermine his image as a master negotiator. Lutnick's evasive comments and Besant's focus on innovative financing hint at a rush deal, possibly slapped together to meet the August 1st deadline. Trump's earlier tariff threats were a high-stakes bluff to force Japan to the table, but the messy execution risks backfiring. If Japan's investments underdeliver or tariffs spark retaliation, Trump could escalate, potentially slapping higher tariffs on Japan or other allies, as he warned in July letters to South Korea and Malaysia. The global implications are staggering. This deal was meant to cement U.S. economic dominance, but it's exposing cracks instead. The dollar's status as the world's reserve currency depends on trust, and every tariff spat, every scribbled edit, erodes that confidence. Japan's $1.1 trillion in U.S. Treasury holdings, the largest globally, gives it leverage. Rumors of Japan selling bonds after Trump's April tariff threats triggered a market sell-off, raising doubts about the dollar's safe haven status. The BBC notes that Japan's deal could set a precedent for other nations, with the EU and China watching closely. If Trump's patchwork tariff strategy, 15% for Japan, 19% for Indonesia, 50% for Brazil, continues, allies may diversify away from U.S. markets. As the World Gold Council reports, 76% of central banks plan to cut dollar holdings by 2030. That shift could slash U.S. Treasury demand by $100 billion per percentage point, pushing yields higher and ballooning America's $34 trillion debt service costs. Let's not forget the geopolitical stakes. Japan is a key U.S. ally in countering China's influence, and this deal's stability is critical. The EU and Japan's new Alliance of Competitiveness, announced on July 23rd, signals a broader push for economic security. If Ishiba's government falls or Japan perceives the deal as unfair, it could pivot closer to the EU or even China, weakening U.S. influence in Asia. Trump's simultaneous tariff deals with Indonesia and the Philippines at 19% shows he's playing a global chess game, but the inconsistent rates risk alienating partners. Brazil's 50% tariff, tied to Trump's defense of Jair Bolsonaro, shows how personal grudges can shape policy, potentially isolating the U.S. further. The EU, facing its own August 1st deadline, is negotiating with Trump, but a failure to secure a deal could escalate transatlantic tensions. What's next? The deal's success depends on execution. Japan's $550 billion investment, if delivered, could boost U.S. manufacturing in semiconductors, aerospace, and energy. But if it's mostly loan guarantees or repackaged commitments, the economic impact could fizzle. The 15% tariff, while lower than feared, risks inflating U.S. prices, and Japan's unchanged 50% steel and aluminum tariffs could hurt American exporters. Ishiba's political fate adds uncertainty. If he resigns, new leadership might demand renegotiation. Trump's broader tariff blitz, with its fragmented rates, could destabilize global trade further. For American consumers, the cost of this trade war could hit hard, from car dealerships to grocery stores to mortgage payments. For Japan, the deal is a gamble to preserve U.S. market access while protecting its farmers and industries. As we close, let's reflect on the bigger picture. This deal was supposed to herald a new era of U.S. economic might, but it's exposing vulnerabilities instead. The dollar's dominance relies on faith, and every misstep, every marker-scribbled card, every vague promise chips away at that trust. Japan's pragmatism in striking this deal shows its strategic calculus, but other nations may not follow suit. If Trump doubles down on tariffs, we could see more allies hedging their bets, diversifying away from U.S. markets, or forming new economic blocs. The Nikkei's rally may fade if inflation spikes or Japan's economy falters. For American households, the cost of this trade war could hit hard, from car dealerships to grocery stores to mortgage payments. So, here's the cliffhanger. Can Trump turn this chaotic deal into a true win, or will the scribbled numbers and shaky commitments unravel his trade agenda? The world is watching, and the stakes are high sky. Will this agreement hold, or is it the spark for a broader economic storm? Drop your thoughts below, hit subscribe, and stay tuned because the next move could redraw the global trade map for decades to come.